Why has the bond market proved so popular for owners looking to raise funds?
Well, I guess with the bank market having been fairly tight over the past years, bond market is a good way of raising money, and it's also another way of raising, funds to grow your business in combination with other types of equity and bank debt. So it has some good features, and typically it's weaker covenants, or at least somewhat weaker covenants than bank debt. It varies from case to case, but typically, and it has a bullet structure, which could be a good thing for a shipping industry, which to some extent is struggling with cash flow. So, but it's not for everyone to raise money in the bond market. Typically, you need to be a good company, a bit of contract coverage, and there are some factors there that needs to be in place to be able to use the bond market actively. The good thing about bonds is that they mature, so at some point they need to be refinanced. So I think bonds will likely be a more natural part of the shipping company's total balance sheet in the future than it has been in the past, with banks being more reluctant to lend you, the high levels that you saw in the past. You can't necessarily get 8% gearing on an unfixed new building anymore. So I think bonds in combination with bank debt is good for your balance sheet. So I think the market is going to be there for a long period, but it's going to be on and off whether investors are there to take it.
Most companies selling bonds have been of an offshore flavour. However, as Wilhelmsen proved this week, the market is open to the shipping companies too. What does an owner need in order to be successful in raising cash there?
Well, it's many factors that counts in terms of whether you're able to raise a bond or not. Firstly, I think you need to have a fairly good balance sheet in the first place, and you need to be transparent. That is important for investors, so that they can follow the company, over time. Typically, bond investors prefer some degree of contract coverage or visibility in earnings, but not necessarily if you have a logistics system or a system that you use your ships in a more industrial way than, say, compared to pure dry cargo spot trading or crude cargo spot trading. It's easier for investors to grasp that there is value here, and the value creation lies in what the companies create through using their assets.
Some have been raising money from the bond market to repay debt. Is that just a question of delaying issues for further down the road?
Not necessarily. I mean, shipping is all about cycles, and if you manage to refinance bank debt by bond debt, you buy yourself time, and then it's basically up to the investors to judge whether that is a good deal for them or not.